Jain.
Yeah, good morning, everyone. So on Friday, yesterday we saw some corrections in the US market, mainly led by the expectations on CPI inflation data, which is likely to be today evening. So before that, some cool off in the US market has happened yesterday. And also, apart from that, oil has corrected, and which is bring down the oil-related stock in the U.S. market. One of the key reason, another was that the cryptocurrency, a lot of cryptocurrency came off very sharply yesterday, and that has put up some pressure on the riskier stock, and that also got corrected. Apart from that, today morning, Asian markets are a bit negative. Most of the markets are down between 0.5 to 1%. So quite possible we may see similar trend here also. In commodity also, we saw oil correcting by another $2 to $3 yesterday. Two days back, it was somewhere around 98, and now it is at 92. Reason being one, that the inventory levels in the US has increased, which the data show yesterday, and also China has in some of the state has followed the aggressive COVID policy, which market was expecting that they will loosen, but against that, in Guangzhou regions, which is most industrialized regions, they are following some uh, aggressive COVID policy. So that is also impacting oil prices. And apart from that, even the other stock which you are showing some positive signs, like metal, like ore and steel, are also down by around 1.5 and 0.5%. Overall environment seems a bit negative at a higher level. So maybe we may see some profit booking in today's trade. Now I'll request technical team to take up from here.
Yeah, thank you, sir. Good morning, all of you. See, Nifty trading in upper range, and we expect some pressure in current rate. We saw that Nifty faced 18,370, 300 in immediate resistance, but immediate support place around 18,100. If Nifty break that level, then we expect pressure towards 17,900, 17,700 at downside. So today we expect negative open and remain a negative during the day. Bank Nifty also facing immediate resistance around 41, 42,000, 41,900 in upside. Immediate support place around 41,300. If Bank Nifty break that level, then we expect further sell off towards 41,000, 40,700 at downside. Nifty Finance also trading near the resistance zone that's come around 18,830, 18,900, and support place around 18,700. Below 18,700, next immediate support place around 18,670, 18,500 at downside. So overall, three index trading in higher range. So we expect pressure in all three index. Those have position, they can keep a stop loss in all three index. In stock specific, Asian Paint looks weak at current level. We expect yesterday also saw that pressure in Asian Paint. Remain continue today's session also. We expect further pressure towards 3000 and 2998 downside. ICICI Bank's trading near the support zone. If ICICI break 907 level in future level, then we expect ICICI in pressure towards downside around 890 and below that level. Next immediate support place around 870. To keep watch these two stock for selling side. That's it for technical derivative pattern.
Yeah, thank you. Good morning, everyone. So, as per derivatives data front, if we look at the overall structure from the OI front, it is quite visible that there might be a selling pressure in the market in today's trading session. Currently, we are witnessing that on the weekly basis, the OI positions which have gone added up is around at 18,200 to 18,500 strike, where almost around 15 million positions of call data got added up in yesterday trading session, while against it that we are seeing that from 18,000 to 17,800 level, there is almost around 4 to 5 million positions of food trader positions are getting added up. So currently, as per the Y position, it is quite visible that on weekly basis, the momentum seems to be quite cautious. While if you look at the overall monthly basis, it is showing that at 18,000 strike, there is 15 million positions of put trader position. So 18,000 will act as an important support for the market in the today's trading session of our next 1 to 2 trading session. Once if 18,000 level gets broken, the put trader positions will directly get shifted on the downside towards 17,700 to 500 level. So there is a quite possible fall below 18,000 of around 300 points till 17,700 level. On the upper end, we are witnessing that 18,300 to 400 is acting as an important resistance zone. Once if Nifty gives close above 18,300 level, then only we might see some momentum to get build up towards 18,500 level. So currently in today's trading session, we might witness some sell off. As per the PCRY, we are saying that PCR yesterday closed at 0.82 level. So the support for the PCR in today's trading session would be 0.82. Once if PCR goes below 0.82 level, then the profit booking will get increased in the market and more selling pressure will be witnessed in today's session. While the another factor we are witnessing is that premium. From last 2 weeks, we are seeing that the Nifty is almost in the premium of around 60 to 65 points. Yesterday also there was a premium of 59.80 points. So currently till the time when there is a heavy premium in the market of around above 50 points, at that point of time we will witness a heavy volatility in the market. So currently in today's trading session, we might witness today is a weekly expiry. So almost around 200 to 250 points movement we might expect in today's trading session up and down, including both. So we might be cautious in today's trading session with the support of 18,000 level. As per stock specific, we expect Bajaj Finance to show some negative momentum, while in the positive front, we expect Bosch Limited, RBL Bank, and PNB G3 counter looks positive. Thank you. That's it from the derivative front.
Good morning. Results of Rolex rings was okay. Revenue and EBITDA both were flat quarter on quarter and up 12% year on year. Margins were stable at 22%. Management had already guided that quarter two would be flattish, but H2 they have said will be better. So one needs to see because there is a slowdown in Europe and US. So from a near-term perspective, stock might remain sideways, but from long-term point of view, we remain positive. Star Health and Allied Insurance result has improved. Total gross direct premium income grew 11% year on year. However, this is masking the good performance of the retail health segment, which grew by 22% year on year, which is almost 90% of the total mix. Whereas the group segment declined by 54%. Combined ratio also declined to 98% marginally. And market share continues to inch up. It was at 33% in quarter two versus 32% in quarter one. So we are positive on Star Health. Acrisil result has declined. Last year, Q2 did not have the acquired entity which was acquired on 1st of April. So despite of that, the year-on-year profits have declined. Similarly, even on quarter-on-quarter basis, the revenue has come down by almost 20%, whereas management had previously guided that it would more of be flattish. So result has been much below expectations. Margin also came down to 16% versus June quarter 20% and year-on-year 22%. Similarly, profits have also dipped. So near-term outlook is negative for the stock. Piramal Enterprises result has declined. Company took huge provisioning hit, which led to losses for the quarter. Also, stage 2 number, which is the 30 to 90 days past due number for stressed assets, that has increased from 7% to 16%, which indicates that possibly going forward also there could be some more pain. Overall loan book, if we see, it was flattish year-on-year, quarter-on-quarter at 64,000 crores. Retail loan book grew 12% year-on-year and is 40% mix. Wholesale declined 13% and is still 60% mix. Although management is saying that the mix will shift in favor of retail over next 5 years, but still, I mean, if we can compare this stock with others like PNB Housing or even LIC, where wholesale book is very marginal at around 8 to 10% kind of levels. Still, market is not having confidence in their wholesale books, and here the wholesale mix is 60%. So possible that market will not have confidence in next few months and quarters also. So one can avoid Piramal Enterprises. No need to bottom fish. And with these kind of quarters coming in, the cheap price to book itself becomes costly because the book value itself keeps getting eroded. Everest Kanto Cylinder result has declined. Management had said earlier that Q2 will be weak. Revenue declined 11% quarter-on-quarter, 19% year-on-year. Margins also came at 10.5% versus 16% in June quarter and 26% year-on-year. Near-term outlook remains sluggish because gas prices have increased a lot in the last few months. And in future, if the gas prices cool off, there will be again a pickup in sale of CNG vehicles. So that time stock can rebound, but in the near term, I don't expect much. Venus Pipes and Tubes result has improved and was in line with expectation. On a quarter-on-quarter basis, it grew 11%. Year-on-year basis 40%. Company is operating at full capacity, which is why the quarterly numbers are flattish overall on EBITDA PAT front, and going forward also for next 2 quarters that will be the scene. But beyond that, the new capacity, which is almost 3x of current capacity, will be coming from Q1 of next year. So somebody with a view of holding for FY24 and 25, this is a good stock, and there will be good growth seen in numbers over next couple of years. But starting Q1 FY24 and not before that. So we are positive from long-term point of view. There is one IPO opening today, Keynes Technology, and it will be closing on Monday the 14th. We have given avoid rating. Issue price is 587 per share. Total issue size is 858 crores, of which OFS is 328 crores and fresh issue is 530 crores. Keynes is basically an electronics manufacturing player having capabilities in manufacturing of mainly PCBAs, which is printed circuit board assemblies, which is their main product. So business model is somewhat similar to Dixon and Sirma SGS and even Amber, where they are contract manufacturers. And the industry has strong tailwinds, which is working in favor, as industry itself is growing at 40% CAGR. Keynes in last 3 years has grown at 25% CAGR. It has ROC of 22% in FY22, which is good. However, we believe the positives are captured in the issue price, where it trades at PE of 82 times FY22 earnings, which is somewhat costlier than the listed companies whose average is at 77 times. and EV/EBITDA also 38 times. So we think there is not much scope for even listing gains over here. One can avoid this IPO, Keynes Technology. Thank you.
Good morning. Questcorp has posted below expectation set of numbers for the quarter, although the revenue improved by 7.4% QOQ. However, EBITDA declined by 12% QOQ. EBITDA margin came in at 3.2% versus expectation of 4.2% versus QOQ of 3.9%. Adjusted PAT also declined to 42 crores versus QOQ of rupees 67 crores. Stock is trading at 15.6 times FY24 EPS. Thank you.
Good morning. Tata Motors announced its results. The result was below expectation. Revenue on a consolidated basis came at 79,611 crores versus an expectation of 76,758 crores, which grew by 10.7% sequentially and 29.7% on a YOY basis. EBITDA margin came in at 7.8% versus an expectation of 9.8%. JLR revenue was around 5.3 billion euros during Q2 FY23, which is up 36% on a YOY basis, reflecting strong model mix and pricing, with wholesale volumes excluding China JV of 75,307, which was up 17.6% on a YOY basis and 4.9% sequentially. JLR is continuing to focus on signing long-term partnership agreements with chip suppliers, which is improving visibility of future chip supply. On the domestic front, CV business registered a 19% growth in sales over Q2 FY22, led by stronger sales of medium and heavy commercial vehicles and a robust recovery in passenger carrier demand. On the PV business, it continued its strong momentum with wholesales as 1.42 lakhs vehicles, which was 69% higher on a YOY basis and 10% on a sequential basis amid strong festive demand and debottlenecking actions. The demand continues to remain strong. However, what remains a key monitorable factor will be the global uncertainties. Improving chip supply and cooling commodity prices will aid revenue and margins recovery and hence aim to deliver strong improvements in EBIT and free cash flows in H2 FY23. On the EV side, the company is growing with new model launches, network expansion, and investment in charging infra. EVs contribute around 8% to the product mix. The stock is trading at a PE of 11.7 times FY24 EPS. Thank you.
Good morning. Deepak Nitrite reported result which was below expectation. The revenue reported at rupees 1,962 crore, which grew by 16.7% YOY. However, degrew by 4.7% QOQ. The Nandesari plant, which was impacted by the fire accident in the month of June, has resumed its operations in a phased manner, and it was fully operational in October 2022. EBITDA margin declined at 13.8% versus 23% in quarter 2 FY22, and the board has approved investment up to 51% stake in Deepak Oman Industries to set up a chemical manufacturing plant in Oman. The stock is trading at a PE of 23.9 times to FY24 EPS, and we are awaiting for the further updates on the result front from the con call which is scheduled today. The Galaxy surfactant result was below expectations, while the revenue was reported ahead of expectations at rupees 1,232 crore. EBITDA margins were reported below expectations at 10.7%. However, the margins have improved on a YOY basis. During the quarter, the volumes growth was flat due to the volume degrowth of 17% from Africa, Middle East, Turkey region. The PAT has grew by 100% on a YOY basis at rupees 83.9 crore. The stock is trading at 27.4 times to PE, 27.4 times PE to FY24 EPS, and we are positive on the stock with a long-term view. And then Hyobak Colorants India Limited posted results. The revenue grew by 3.3% YOY and 14.4% QOQ. The pigments industry has observed slowdown during the first quarter, and it is expected to see demand stress during the second half of FY23. However, the company has been able to maintain its margins at 7.6% levels versus 7.8% in the last quarter. Currently, we are neutral on the stock. Pidilite Industries Limited posted result below expectations. The revenue growth of 15% on YOY basis during the quarter was largely led by pricing and product mix. The urban markets grew faster than the rural markets. The margins continue to be impacted due to raw material inflation, weak currency, and high priced inventory. However, it has been able to keep its EBITDA margins at 16.6% levels with its selective pricing action and product mix. Further, we will be getting the insights from today's con call. Thank you.
Yeah, apart from this, a few more results like Balrampur Chini reported numbers which were declining. Company reported loss at EBITDA level, but the result got impacted mainly because of this being the off season Q2 where the production is not there, and company was having high inventory and carrying inventory to the third quarter, which has resulted into higher expenses and losses for the quarter. Going forward, the company is commissioning large distillery capacity and in the new seasons, and that will add up to the profitability substantially. And seasons so far looks positive for sugar seasons. Only concern is that government has not yet came up with export policy. Current year again, the companies will be with high production than the consumption. The production will be over 36 million, whereas the consumption will be somewhere around 27 million. So additional production of around 8 to 9 million will need to be exported, and government need to come out with policy on that. So once that come up, then and that has to come up, then the things will get some boosting. Apart from that, the prices are stable up till now for the sugar in India, and international prices, as India has not yet started exporting, are showing some positive trend over there. So overall seems neutral in the near term because of the restricted government policy. If suppose the policy come on a positive side, then that can boost the stock in coming period. Then another stock, Hindustan Oil Exploration, has come up with the numbers. Numbers were okay. In fact, in this quarter, their B80 field faced some problems wherein the oil production was stopped and also gas production was also stopped. Now the gas production from B80 has resumed, but the oil production is still awaited. So that oil production will be possible only after the repairing of some in B80 field, and which will then only will be able to start. And that may take what we feel that can be possible only in the fourth quarter. So third quarter oil may not come, but yeah, great gas production from here come, and also from 1st October the prices of the gas has also increased, so they will benefit in some other field like D-Rock field, which they have in Assam. There the prices benefit will come. So overall seems okay at current level. The key thing will be to watch is how the oil production start, and once that start, then it can act as a positive for the company. Then Prince Pipe and Fitting has come up with the numbers, and the numbers were below expectations. But what we had seen that most of the PVC pipe company has reported numbers which were poor, be it Supreme Industry or even the phenolics industry and now the Prince pipe as well. But this is mainly because of the PVC prices, which has corrected very sharply in the second quarter. And now after that, the prices has come down to pre-COVID level. And now we feel that the prices are likely to stay here, and the lower price stable prices can boost the demand in the busy season, which is H2 is generally a strong period for all these pipe companies. So negativeness is behind with this result, and now going forward things can act as a positive for the all pipe company including Prince Pipe. So that's all from us. Now I'll hand it over to commodity team.
Thank you, sir. Good morning, everyone. Today, we are likely to witness a range of movement in commodities. Uh, One can witness profit taking in gold to the level of 51,300 to 51,200. So the prices are expected to cool off, and prices are resisting 51,700, 750 on higher end. So once this profit taking is done, one can witness buying interest coming in at 51, 200, 150 levels, and one can go long at that price and maintain a stop loss below 50,900. Silver also, we expect 60,800 to be supportive area. So prices can test around 60,800, and then again pullback can be replaced. So overall, seems to be the market seems to be in a two ways move. So profit taking is advisable at lower end. Crude also prices are likely to test 7,000 to 69.50 on lower end. However, a pullback can be utilized to sell around one can sell around 7,100 with a stop loss above 71.50. Natural gas prices are expected to trade in a range from 500 to 470. So around 495, 500, one can initiate a sell and maintain a stop above 508 levels. And again, supportive at 470. So for a pullback, one can buy if this level is sustained. In metal front, we could witness some profit taking. However, 682 seems to be a resistance area in copper, and prices are expected to cool off and test 670 levels on lower end, whereby one can initiate a buy also. So, expecting a range bound movement in metals too. Zinc also one can sell around 260, 250 with a stop loss of 265. Prices can test 259 again, and 259 one can initiate a buy for a pullback. And aluminum too, prices are expected to trade in a range from 206 levels to 200 levels. So that's it from me. I'll ask Riya to take over from here.
Thank you, sir. Good morning, everyone. On the currency front, we are seeing rupee has the Indian rupee has gained to its highest level in more than a month. This has come amid the foreign inflows. And of course, as the risk of sentiment surfaces the market, now the foreign investors' inflows have remained persistent, which has so far driven the currency stronger. But we do have even-packed week, including US midterm elections and inflation data scheduled to be released today. So volatility is likely to be at its highest. If you look at the today's opening in the Indian rupee, we are seeing it opened at around 81.68. Now, I think 81.30, 81.20 has been made the support, and it will probably trade on the higher side, because if you look at the dollar index, it has also resumed, or has ticked back on the upside after falling almost 2.5% in the past week. We are seeing it trading at around 110.26. So this will be reflected into the Indian rupee as well. And we can see a small shoot up happening into the Indian rupee towards 82 to 82.15 in today's session. You could maintain a base of 81.20 or in the intraday sessions for the Indian rupee. For the euro and pound, they both have opened on a negative note at around 81.96 in euro INR, and look for a breakdown of 81.88 in today's session to go short into the pair. If that doesn't happen, the pair will resume its resume the bullish leg towards 82.10, 82.30. But the probability of it breaking down 81.88 is on the high, and you can go for a short by keeping a target at 81.76, 81.70, and SL at 82.10. For GBP INR also, recommendation is to go short below the level of 93.10. You can look forward, you can look for a target of 81, 93.10. You can look for a target of 92.65 in today's session, and SL at 93.50. For JPY INR, the momentum will be very volatile, and you will see a zigzag momentum within the range of 56.11 and 55.94. That's all on the currency front. Thank you.